doing all that kind of stuff, or even if you're just soaking it in, that's always a good thing too, right? Be able to soak in the information, and kind of just, again, hear somebody else's story. You guys are obviously following me, you're watching me, so it's always good to know what I said yesterday, right? Everyone sees the glory, but only few know the story. So yesterday, if you haven't plugged in, we did a live stream. It's actually on my channel. You guys can go back and watch that. But we did a full stream, all right? Giving you guys from back when I very first started trading, or even found out about trading, back in 2015 to when I started trading Forex in 2016 to when I started trading binaries in 2019, and how we got to where it is that we are today. You know, all the ups and downs, all the trials and tribulations, everything that I had to go through, everything that I went through, right, and I pushed through, and everything that got me to where I'm at today. Now, one of the biggest questions, I get this all the time. People ask me this all the time, and literally year after year after year, my answer has been the same. Now, if you are brand new to trading, people always ask me, what is the best style of trading? Like, what's better? People ask me why I don't trade stocks. Like, why don't you trade stocks? People ask me, why don't you trade leverage? People say, why do you trade binaries? Nobody ever asks me about binaries, right? It's always, why do you trade binaries? But I truly do believe that the style of trading, the instrument that you trade, it really is dependent on your lifestyle and what it is that you're currently doing, right? So the reason why I say that is because, if you guys follow me like on other platforms, like my people on Instagram right now, right? If you guys follow me on other platforms, you know that every once in a while you'll see me post. Every once in a while I do still trade. I have a leverage account, right? So leverage MT. I trade on MT5. I don't use MT4 anymore, but I trade on MT5. I do place trades every now and then, but my main thing, my baby, my go-to is always binary options, right? And I do believe that it really is just dependent on your lifestyle, how your day-to-days is. And when I talk about like the trading plan and stuff like that, so knowing your clock in, clock out hours, when you want to trade, how long you want to be on the charts, and overall just what it is that you're looking for. And kind of just breaking down the two, that's what we're going to do today. And I'm also going to answer some of your guys' questions as well on that, and really taking it to the next level. But I think the biggest difference is between leverage forex and binary options is honestly the simplicity in binary options and being able to get on the charts and really just make the amount of money that you want to make like that, like literally within minutes. So it's more like controlled. It's like controlled income. I get on, I know exactly how much I'm looking to make, and I'm kind of just good with that. It's like get on, get off. I know how much I'm making, that's it. Whereas with leverage, it's kind of up in the air, right? So the reason why I say that, a lot of the times, when you're trading leverage style, and we're gonna break down a few more things, but I want to jump into the trading aspect first a little bit. But when you're trading leverage, the truth is that I always tell people it takes way more of an analysis, right? Of an analysis of really looking into the charts, spending a little bit more time on the charts to kind of get that really good trade setup. Whereas with binaries, and it's almost like it's kind of ironic, right? I'm gonna go over the irony within it in a few. But with binaries, it's literally you can get on and you could be on a charts for 30, 40 minutes, maybe an hour, and make just about the same amount of money as someone who's trading like the same instrument, currency, commodity, or whatever the case may be, as someone who's trading the same as leverage. But you could do it in a shorter period of time. And the reason why I say it's kind of ironic, because even though binaries, you're on the charts for a shorter period of time, right? You do have to be more focused than you do with leverage. And the reason why I say that, and I know a lot of y'all probably heard me say this before, and maybe you could relate, but when you're trading binaries, even though it's really quick, you're done in like 30 minutes, you're done in like less than an hour, right? You have to be more focused and you have to be more attentive to the charts and what's going on with the charts, because everything is about your entry. Like absolutely everything. When we trade binary options, it's about time and price, right? So you got to get in at the right price, the perfect entry, and you got to get in for the right amount of time, okay? So you got to be a little bit more focused in looking at the charts and understanding where the markets is going, because there could be plenty of times where you miss a trade literally by like 2 pips. Like if you just would have got in 2 pips earlier, you would have cleared it with all your money. How many people here, especially people who trade binaries, right? How many of y'all here have ever been in a trade and you were in profit for the entire trade, and then as soon as you was about to clear, it went the other way and it took you out? Right? Drop an LOL in the chat. LOL's in the chat real quick if that has ever happened to you. You were in profit for the whole trade, everything was looking good, and then right before you were about to clear it, it took you out and you lost the trade, right? So that's why I always focus on entry points and kind of like mastering the entry. More than the strategy, mastering that entry, right? Whereas with leverage style Forex, and this is where if you're looking at the balance scale, right? Leverage is a little bit better in the sense that, I wouldn't say better, but it's easier in the sense that you don't have to be correct with your entry. That's just the truth. You don't have to be correct with your entry because let's say I enter at this price right here, 456, right? And that's my entry point. I can put a 20 pip, a 30 pip, or even a 15 pip, right? I could put a stop loss on that trade. And as long as the market doesn't come down to the stop loss, I'm in that trade for as long as it takes me to clear it, right? Or to make my money and take profit, whatever your TP1 is, right? Whereas with binaries, okay, so that's why with leverage, it doesn't really take much focus, to be honest with you. You just have to have a good strategy. And if you have a good strategy, you can ride the trade out up until the market goes in the direction that you're looking at. With binaries, it has to be on point, right? So the reason why I say it's all about lifestyle is because there's a lot of times where like I'm very busy. I love trading New York session. That's my favorite session in the morning. But there are plenty of times where I know I'm busy and I know I cannot sit down and really, really focus on the charts and make sure that my entry points are on point, right? And those times, that's when I typically look for setups. And I'm like, you know what? Maybe I should place this trade for a leverage, right? I should place this on a Forex account, a regular Forex broker, MT5, and maybe set a stop loss at 15, 20 pips, just in case my entry point isn't on point, right? It isn't to the T exact. And if I'm busy in the morning, I can place that trade, set my parameters, and forget about it, right? And in a situation like that, where some of y'all, you might want to trade New York session, but you might work in the morning, all right? Or you may go to school in the morning, or you got church, or whatever the case may be. There might be things that you're doing in the morning that you can't really sit down and focus on the charts. And that's where leverage might be a little bit better for you because you can set the parameters and just forget about it. Come back to your phone a couple hours later and see if it take profit or if it stop loss. And the beautiful part is that sometimes it might not even hit either one of them and you're still in the trade hours later, right? Whereas with binaries, you have to be correct, right? So you got a short period of time. Typically, most people that trade binaries, we're not really doing 3 hours, 4 hours, 5 hour positions, right? Let's keep it honest. It's usually less than an hour on our positions. So you have to be correct within that short period of time. So that's where the whole lifestyle thing comes into play, all right? And hopefully that makes sense to y'all because people always ask me, like, what should I trade? What should I trade? And I would say it's really depending on your lifestyle and what it is that you want to do. I'm also the type of person that I'm just very impatient. I hate sitting on the charts for hours upon hours upon hours. It doesn't work good for me, right? I can't do that. I can't look at, the 4 hour time frame, the daily time frame, the 1 hour time frame and do multiple markups on each time frame and then come down and all that kind of stuff you got to do with MT4. I just like binaries, again, because of the simplicity and how things work. Now, when it comes to comparing the two, one of the biggest things that people talk about is the risk, right? The risk to reward. And I want to get to that first because that's the main thing that everyone talks about is the risk to reward with binary options versus leverage, okay? And obviously with leverage, we already spoke about being able to set up those parameters and kind of just setting the trade and letting it ride out for as long as it can go. Like sometimes, some of you guys trade without a take profit, right? You don't have a TP1 or a take profit set at all. You just have your entry and your stop loss set, right? Always trade with a stop loss, by the way. Never place a trade without a stop loss, okay? But some of y'all don't even have that. So in certain situations or certain scenarios, you might only be going for 20 pips and you could potentially make 30, 40, 50, 60 pips out of that one position, that one trade. And obviously when you're trading leverage, the more the markets move in your direction, whether it's up or down, the more they move in your direction, the more money you make. Whereas with binaries, it's fixed. It's a fixed risk and a fixed reward. So whatever price you get in at, right, or whatever your risk is, if I risk $50 on this trade, the maximum I can lose is $50. Whereas if I win, okay, we know there's no broker on the binary options side that pays out 100% payout, except Nadex. But most people don't like Nadex, so we're not even going to talk about that, right? We're just going to say there's no there's no broker that pays out 100%, okay? So my thing is that obviously you have to be aware of the fact that you can't compare the risk to reward. And a lot of people mess up. They mess up because that's what you're doing. You're comparing risk to reward between leverage style trading and binary options. And what you're not understanding is that you can't compare, because in binary options there is almost no you can't really do a nice risk to reward, or what's your ratio, like a 1-to-2 ratio, a 1-to-3 ratio. You can't compare the two because that's not how binary works. When you're looking at binary options, your payout 99% of the time is going to be in percentages. So if you do trade binary options, you know that when you're looking at your broker and you're looking at each currency pair or whatever instrument you're trading, it's always going to give you a payout percentage, and it's going to tell you how much that pair is paying out if you win. Okay? And so, like, for example, if you have a $100 trade and it says it's paying out 70%, then even though you might risk $100 on that trade, you're only going to make $70 if you clear that trade. So you're risking 100 to make 70. And where most people come in, they're like, hey, that just doesn't make sense, right? It doesn't make sense to me. Because why would I risk 100 to make 70? Well, the way that I like to look at it, right? And you guys just think with me for a second, right? And this is for both, for Instagram and YouTube, right? So just think with me for a second. People say, why would I risk $100 to make 70? Well, I can ask the question of, why do people spend, all right, thousands of dollars a year to play the lottery, right, with a 1 in 20 million chance of winning that, right? It's because it's easy to do, and the potential to win is pretty good, right? So you're willing to put up that extra money so that you can potentially make your full payout. Now, the difference between this and the lottery, for example, when you talk about binary options versus the lottery, is that, well, number one, the lottery is gambling. You're leaving it completely up to chance. There's no sure way to really, learn how to do the lottery or study the lottery or whatever the case. There's no sure way of doing that, whereas with binary options, we're all trading in the same market. So you can't really say binaries is gambling and Forex is not, right? Binaries is gambling and stocks is not. We're all trading the same thing. We look at the same prices. We look at the same charts. We look at the same currency, everything, right? So it's calculated risk. And that's the biggest thing. So you have to be able to calculate your risk correctly. And if you can just win more times than you lose, whereas with binaries, you automatically start with a 50-50 chance of winning. And we all understand that, right? It's either, you buy or sell, it's either you win or you lose. That's it. All or nothing style of trading. So being that you automatically start at 50-50, it's very simple. You get a simple indicator in there, you get a simple strategy in there, a few confirmations in there, you automatically bump those odds or those chances from 50-50 to 60-40. And this is how so many people are coming into binaries with no experience whatsoever. Most people don't even know what they're doing, and they still have been able to clear and make money in the process, right? If you guys have ever made any kind of money in binary options real quick, drop a me in the chat. I want to see where everyone's at. And if you're just tuning in on the YouTube, make sure you guys go ahead and like the video, okay? Let's get those likes up, right? But it's very simple to come in and clear. It's so easy. So when you're looking at those odds of just doing something easy, like putting an indicator on the screen, there's so many YouTube videos, and I'm sure you guys have seen it. If you've ever looked at the best strategy for binary options, best 1-minute strategy, best 5-minute strategy, whatever the case may be, when you look at that on YouTube, you're going to see a bunch of videos of people just promoting the best indicator to use, right? Use the stochastic, or use, the MACD, or use moving averages, and you can make a bunch of money. And the reason why people are able to promote these single indicators and still make money trading binaries is because just by adding one extra confirmation to the screen, you go from 50-50 to about 60-40. If you look at the average person that trades binaries, if you look at their win-loss ratio, it's usually in the 60s. And what most people don't understand is that you can actually make a lot of money being 65% correct. You can make a lot of money. I know everybody wants to be 90% correct, 99% correct, but there's millionaires out there that have made millions in the binary option space that are still like 60 to 70% correct. And it's because with binary options, even though the risk to reward, right, is upside down, the potential of you winning the trade is a lot greater. So being that the potential of you winning is so much larger, it's more likely for you to make money, right? And it's easier to clear. So that's why people would go ahead and tap into binaries, even if the risk to reward doesn't really make sense. And hopefully that makes sense to you guys, right? So when you're looking at that kind of stuff, I mean, another analogy I can give you, everyone here, how many of you have ever played the lottery before? You did a scratch off, you played the numbers, whatever. I know we got people from all over the world here. I don't know if you guys have, a lottery in your countries or where you guys are at, right? The jackpot, the Mega Millions, or whatever, even just a little scratch offs, right? If you play a lottery, okay, we all know when you play a lottery, you have like a one. As a matter of fact, let me search this up. I'm gonna do this right now. Let's do this. What are the odds of winning the Mega? Okay, cool. Let's see if I can find an answer for you guys real quick. I don't know this, but I know it's like one in like the freaking billions upon billions. Okay, so here we go. So the jackpot, the jackpot, right? Mega Millions. You have a 1 in a 302, 575,000. I mean, it's a big number. Over 300. All right, million chance. Okay, of actually winning that. 1 in 300 million. Okay, chance of winning the Mega Millions. And people play that every single day. Now, what if I told you that you had the opportunity to take that 1 in 300 million and you can make that, 70%. If you had a 70% chance of winning the Mega Millions, how often, how much more would you guys play a lottery? Even if you don't have the lottery in your country, right? Like I said, I don't know about every country on here, right? But even if you don't, if I told you you could play this game right now, and you had a 65 to 70% chance of, if you won, making millions of dollars, how many of you guys would do that? How many of you do it without even asking a question? I would. I'd take a 70% chance right now. Tell me how much money I got to put in, right? Let's do it, right? But there's people that do it every single day, and they have a 1 in 300 million. I don't even know what percentage that is. I don't even want to get into all that. But that's just horrible. That's horrible math, right? But people are willing to do it because of the reward. So with binaries, it's the same exact concept where it says, if you're looking at the whole risk to reward factor and how the risk to reward is upside down because you're putting in X amount to make a portion of that X amount, you can't look at it like that, right? You can't look at it in a negative light. What you have to say is that the reason why the risk to reward is upside down is because there's such a higher, chance of me clearing this. I have automatically a 60% chance, 70% chance of actually winning. Whereas with, leverage style trading and MT4, it does take way more of an analysis. It takes more of patience, to be honest. It takes more of a trading plan to be able to catch these moves in the market, because whereas with binaries, we're only looking to be correct within a certain period of time, and it doesn't have to be a very big move. In fact, let me go ahead. Let me see if I can pull up the charts for you guys real quick. I'm going to show you guys exactly, give you more of a visual of what it is that I'm saying right now. Right? Boom. So you guys should be able to see that. Awesome. Right? So with like a leverage style, trading strategy, we would typically be looking, all right, you guys should be able to see my screen. If you can't see my screen, you're on Instagram, go tap in on the YouTube. We're doing a YouTube live right now. So that's what we're doing. I'm going to cut the Instagram pretty soon anyway, so you might as well go to the YouTube. All right, so something like this, from here to here, this is 120 pips. People will get excited about, right? But here's what you got to understand. You have to be very good at predicting where the market is going to go to be able to smack that 120 pips. Whereas with binaries, right? I got to zoom all the way in for this. Because on that same exact move that you just got 120 pips, I can catch 13 pips and make just as much money as you in a shorter period of time, which also gives me more opportunity to look for another trade setup and do the same thing within the same amount of time that you're holding for that 120 pips. I just did the same thing within 30 minutes and caught maybe 13, to 20 pips, right? So again, risk to reward to me, when I look at it, it doesn't really matter too much. I don't focus on, oh, it's upside down or whatever the case may be, because I know that if my strategy works and I could just win more than I lose, I'm always going to make a ton of money trading binaries, right? So let me know in the chat, guys, if that makes sense. And again, this is open discussion right now. If you guys have any questions, feel free to hit me up in the chat box with the questions as well. I'm going to read the Instagram comments real quick, and then we're going to cut the Instagram live. What's going on, everybody, on Instagram, by the way? How's everybody doing? I see there's a few things. Yeah, it was a few people that I was talking on Instagram. All right. Christian said, what's better, binaries or forex? That's what we're talking about on YouTube right now. It's literally the name of the title of the video. All right. Boom, boom, boom. Christian, what kind of question is that, man? You already know I'm going to say me. Why you got to ask a question like that? Yo, my guy Natwa, what's going on, man? Haven't talked to you in a while. Haven't seen you in a while. Let's get it. Let's go, let's go. YouTube is the same. So if you guys are on Instagram, my YouTube is the same exact name as my Instagram. So it's Rockstar FX. All right, Rockstar FX. So I'm about to cut the Instagram live right now. We're going to go straight to YouTube. We're going to finish this up on YouTube because I am showing visuals as well. So we got a few things, locked in. All right, so I got the charts pulled up and everything like that. I'm also about to smack 100,000 subscribers. So make sure you guys go to the YouTube right now. We're going to continue this live, all right? See you guys later. Peace out. Boom. All right, so back to you guys. Like I was saying. So someone literally just asked me as we're doing this, right? What's better? So that's what we're talking about, right? So back to what I was saying. In terms of the risk to reward and how everything works, you cannot compare the risk to reward. So that's the first thing I want to check off right from the bat. Don't message me about risk to reward when it comes to it, because yes, you have the potential to hold, and if you have a lot of money, you can scalp with a high lot size. But the thing is that most people do not have enough money in their account to do even a standard lot, right? 1 standard, 2 standards, 5 standards. I mean, it really doesn't get good scalping, to be honest with y'all. It doesn't get good scalping until you got at least 2 standards on your trade. Because at that point, you can take 1 to 2 trades, maybe 3 trades a day, and you can still make a couple $100 with that scalping with MT4. Whereas with binaries, okay, you don't need to have standard money, right? You need to have a couple $1,000s in your account to make a couple $100 in a day. So how's that for risk to reward, right? Let me put on my glasses so I can read these. Boom, boom. So yeah, so when it comes to binaries, like I was saying, we're only looking to be a few points in profit. And if you guys are not familiar with points versus pips, okay, it's very simple. So for every 1 pip, okay, 1 pip, I want you guys to write this down if you're taking notes. All right, 1 pip in the market, and I'll actually type this up so you can see it. 1 pip equals 10 points. 1 pip equals 10 points. Now, how many of you here trade my 3-step setup? Who here knows? You probably learned from me. You've been in my academy, and maybe you saw some of the videos where I briefly went over it, on YouTube. All right. How many of you here have ever traded my 3-step setup? So if you trade the 3-step setup, we look for a few things, right? Aside from the overbought, oversold, and stuff like that, right? So once you get your confirmations, I always tell you guys when you're trading binaries, you got to separate confirmations from entry points, right? Give me a second. You got to separate your confirmations from your entry points. So once you get your confirmations and you're looking for the entry, right? We know overbought, overbought, overbought. We're looking for the stochastic to cross down. Once it crosses down, typically that's when we're getting in, probably on the new candle. All right, so after you get that candle going in the direction that you're looking to trade, all right, and boom. So even on this random setup that we just pulled up on the chart real quick, right? Random setup, you guys see we got all 3 steps in 3-step setup. We waited for the candle to close. It closed bearish engulfing, which is always good. And then we went ahead and we entered on a new one. What's crazy about binaries is that, and this is another point that I'm getting into right now. So we went over risk to reward. Now we're going to talk about how to trade it and the differences between the two in terms of what it is that we're looking for. So in binaries, you only need to be 1 point correct. 1 point. Now remember, 10 points is 1 pip. So if this market moves 1 pip, which is from here to here, look how small that is. I got to zoom all the way in for you guys to see this. Okay? But 1 pip on this candle is from here to here. This is 1 pip. This little area right here. This is 1 pip. And we only have to be 1 point in profit. Not 1 pip, 1 point. So if we're looking at 1 point, that's literally right there. Right there, at the very tip of that candle. So you're looking at the difference between the two in terms of how much money you can make and why you want to do it. Well, you have to ask yourself, okay, what is simpler for me to clear? Can I clear 1 pip and make maybe $50, right? $50 in 5 minutes. You do that 3 times, that's $150 in 15 minutes, right? So can I do this, or do I want to go for? Let's say you're trading a point 0.10, right? You got a 0.10 lot, which we know on a 0.10. All right, and this little education for y'all. So if you're trading MT4, MT5, right? Okay, and you're trading a 0.10. All right, lot size. For the most part, and it kind of varies. It varies now and then depending on the currency pair and stuff like that. But we're not going to go too deep into that. For the most part, every pip that you go in profit, okay, equals $1. Okay? So if you're trading MT4 and MT5, every pip that you go in profit equals $1. So let's say you got a 0.10 on your account, okay, you're trading a 0.10. And obviously if you're trading a 0.10, you want to have more than $100 in your account. Because 10 trades with a, I mean, if you're thinking about it, what is that? Yeah, you take 10 trades, they all hit stop loss at 10 pips, you're done, right? If you do a 20 pip, 2, 4, 6, 8, 10, that's 5 trades. If you lose 5 trades, you're done, right? So you definitely want to have more than $100 in your account. I would say if you're trading a 0.10, absolute bare minimum, have 500, at least 500. And even then, that's kind of crazy, especially for some of you guys that are brand new. You're probably going to be hitting those stop losses every now and then, right? But let's just say 500 in your account, right? So, long story short, my point is this. 1 pip equals $1. If I wanted to make, let's just say, $50. If I want to make $50, I have to clear 50 pips. All right? Now, this is obviously a good setup, right? This is Rico's setup. So if we're looking at 50 pips, trading MT4 or MT5, that would be over here. All right, and we entered at the same price. So same price. 50 pips would be somewhere down here. All right. So that is about 2.5 hours, 50 pips down, to make $50. 2.5 hours, 50 pips down to make 50 bucks. All right, holding that trade. All right, or you can have a binary account and you could place one trade of $50, or maybe two trades, $25, and not do the full 50 pips, right? But you can do maybe two positions, whereas one trade you got in on the sell, next trade you got in on the buy, right? Again, based on your strategy and how it is that you're trading, boom, boom, boom. And that would have been the same $50 in about 25 minutes. Right? So that's number two. People say, well, why would you trade that versus that when, in MT4 it's easier, you can hold the trade, you can blah, blah, blah. No, all that is cool, but the truth of the matter is if you don't have a lot of money in your account and you can't run the big lot sizes, you're not going to be making a lot per trade. And if you are making a lot per trade, you're holding these trades and you're catching way more than 50 pips. Now, in order to be catching that amount, like that massive amount of pips, because as we can see, the markets move up and down. So in order to be catching that many pips, you have to be trading in the overall direction of the market, right? Because even this move right here, this move only moved 50 pips before it came all the way back up. So the most you can absolutely make on this position is $50 or 50 pips. Depending on your size, your account size, you can make however much you want, right? If you're tuning in right now, guys, by the way, drop a like on the video, okay? But the most you can make on this trade is 50 pips. And I almost kind of think about, I think about leverage the way that I think about money, right? I want you to hear me out, right? Think with me for a second, okay? When we're talking about money, when we're thinking about money, and I talk about business, okay? I always say, how many of you here know the cash flow quadrant? How many of you guys here know the cash flow quadrant? Robert Kiyosaki, cash flow quadrant. How many of you here know that? Okay, Robert Kiyosaki's cash flow quadrant. Who here is familiar with it? Let me know in the chat. If you're not, you got to get familiar with it, man. Start reading a book or something, right? Rich Dad, Poor Dad. Books like that. All right? If you guys want to make money, you got to know about money, okay? So, in the cash flow quadrant, I'll draw it out for you guys real quick, okay? So in the cash flow quadrant, it says this, all right? We're about to take this to the next level. This is so much more than just trading right now. Watch this. So the cash flow quadrant says this, okay? It says there's 4 ways to make money in the world. It's only 4 ways, all right? There's 4 ways that cash flows throughout the system, the financial system in the world. The first way, okay, and this is a little bit off topic of trading, but it goes hand in hand. Watch it. All right, the first way is employee. All right, the E sector, the employee. This is where most people reside. Okay, over 60% of the entire population works a job and they are an employee. Okay, the second way, all right, I'll just go ahead and do this, is self-employed. So you got employee and you got self-employed, okay? The self-employed people, obviously I don't have to explain employee, but the self-employed people are the people that you decided you want to be your own boss and you did something to where you kind of control your own income now. So you're the boss, you're probably barbers, Uber drivers, even traders, right? Self-employed, traders, self-employed, doctors, lawyers are self-employed, right? So there's a lot of self-employed professors out there. You're your own boss. You're running the show. You're doing what you got to do. Then you have the business owner. Someone who put together a system whereas they don't physically have to be present and their business is continuously making the money. All right, so these are the big businesses. All right, these are the people who get it. So now you went from being, let's just say hypothetically, you went from being a barber to now you own the barber shop. And you got a bunch of barbers that work in your shop that pay you every month to work in that shop and to rent a chair from you, right? So you don't physically have to be there. As long as they want to work in their shop, they have to pay you. You're a business owner, right? Maybe you, I don't know, maybe you do, you own a doctor's office. You own a practice, right? And you got a bunch of doctors and stuff like that that work in the office, so on and so forth, whatever. You're the top dog. That's the business owner. You got the system in place, right? So that's business owner. Then you have the investor. And I don't have to explain the investor. The investor are people that find ways to put money to work for them. So their money is making them more money. All right, they invest in and make more money off of that. So this is the cash flow quadrant. This is how I think about leverage trading. Watch this. So the problem with this is that most people reside on this side right here. Employee and self-employed. This is where 95% of the population is. And the problem with this side is that your money is dependent on time. Right? Your money is dependent on time. Right? Whatever. Something like that, right? So, you want to be able to get out of this side where your money is not depending on time anymore. Okay? And when we're looking at the charts over here, all right, did you guys get this, by the way? Let me know if you guys understood this. If you guys got this. Before I move on. Because this has to make sense for you to understand what it is that I'm about to talk about in a second when comparing the two. Let me know if that made sense in the chat, guys. So you got the employee, the self-employed, business owner, investor. Business owner put a system together to where their money is always working and they're always making more money, even with them not being there. Investors found ways to put their money to work so that their money is making them more money. Whereas these two people here always have to show up to get paid. Okay? So here, your income is limited. Okay? Your income is limited because you can only make as much as you can work. You can only make throughout as much time that you have. Does that make sense? Now the problem is that we all have limited time in a day. We got 24 hours, right? No one has 25, no one has 26. And we all have limited time here. Eventually, our clock is going to expire. All right? Now, when you're talking about this over here, the reason why I brought that up is because I kind of just look at it the same way. The reason why I don't like this, okay, is because my income here is limited on how far the markets can move. So I can have the best strategy in the world. But if the markets only move 50 pips, I can only make 50 pips. Does that make sense? If it only drops down 50 pips before it reverses, and my income is dependent on how many pips I can catch. So when you're looking at MT4 and MT5, your income is pretty much dependent on how many pips you can catch. So if my income is dependent on that, and I know that the markets are eventually always, every market reverses. Okay, there's always going to be a reversal. There's always going to be pullbacks. There's always going to be retracements. So if I know this, then I also know that my income is also capped based off of how far the market is going to move in that time. Does that make sense? So my question is, all right, just looking at the two and how each one is traded, because people ask me this all the time. Looking at the two and how each one is traded, why do you do binary options versus MT4 and MT5? Because I can make the same amount of money and not have to worry about the markets reversing, because when we trade binaries, most of the time we are trading reversals. We're trading the reversals. So if we know that the markets are always going to reverse, they're always going to go up and down, wouldn't it be smart to trade that? If we know it's always going to happen, the smartest way to make money is going to be trading that. Quick in and out, reversals. Now, again, I know everybody has their different styles of trading. I'm not saying this is the best. I'm letting you guys know why it is that I traded. This is what made sense in my brain. It doesn't have to make sense in your brain. If it does, awesome, right? But this is what made sense in my brain. So while you was holding this for 50 pips and hoping with your fingers crossed that you can ride it out and make more money and more money and more money the longer you ride it, I was just catching these quick ups and downs. Multiple setups right here in this small time frame. One reversal, two reversals, three reversals. Comes down, boom. Bottom Bollinger Band, 4 reversals. Boom. Top Bollinger Band, 200 moving average, 5 reversals. Right? I'm just catching this. 6 reversals, 7 reversals. Boom. 8 reversals. And I just caught about 5 to 8 reversals. All of them looked like they would have cleared if we would have caught them, right? None of them really spiked us out if you're looking at these, right? We have consistent candles going in that direction. So this first one, we already established cleared. Comes back up, right? Let's see if I would have taken this with my strategy. Boom. Yeah, this one would have been good too, right? 3, 3, 3. Boom. We took that for a few candles. It drops, right? Come over here. We got this 3-step setup again. If you guys aren't familiar with the 3-step setup, definitely tap in with me. Watch some more of my videos on here, or just get involved with the academy, right? But boom, 3-step setup here, shoots up. 1, 2, 3, 4, 5, 6 candles goes up. You would have cleared. 3-step setup again right here. 1, 2, 3, 4, 5, 6, 7, 8, 9. Probably like 10 candles goes down. You would have cleared there. Comes back up. Middle Bollinger Band, 3-step setup. Boom. Middle Bollinger Band, 3-step setup. Boom. So multiple reversals. Multiple. Right? Multiple reversals in that area. So my point is that it's not really capped. It's not really capped. And if I can't find anything here, I can just go to another currency pair and look for more reversals. Whereas, right, if you're trading bigger moves in the market, we know about correlating pairs, right? I talk about correlating pairs pretty often. I just did a live session on that, private session. I thought I did on YouTube. No, it was a private session. So I just did a private session on that where we talk about correlating pairs and how certain currency pairs move the same exact way, certain currency pairs move opposite, right? So when you're looking at big moves in the market, it doesn't really make sense to trade multiple currency pairs that move the same exact way. Whereas there might be, and that's the overall direction. Whereas on a smaller scale, they may be moving the same direction overall, but they might be doing slightly different movement on a smaller scale, right? So again, more potential, more trade opportunity. So let's just write this down real quick, okay? Everything that we're going over and everything that we went over, especially for the people that are just now hopping in on us, right? I don't remember what we spoke about first. If you guys can remind me. We spoke about something first, and then we went to risk to reward, okay? So risk to reward, all right, was number 2, okay? And the risk to reward, I went over the both of them. Risk to reward on each of them, okay? MT4 and leverage has better risk to reward, but where they win kind of on that one because you can do a 1 to 3, 1 to 2, even a 1-to-1 trade is better risk to reward than binaries, right? They have a better risk to reward. They might win on that one, but where the balance is kind of tipped is that even though binary options doesn't have a better risk to reward, they don't have a good risk to reward. So I'll put this MT4 better risk to reward. All right. But binaries has higher chance of clearing. Okay? Higher chance of clearing. Okay? Oh, I talked about the simplicity first. That's what we did. Simplicity first. So, boom. Simplicity, binary wins on simplicity. I think we can all agree on that. All right, boom. So binary wins on simplicity. When it comes to risk to reward, MT4, MT5, all right, can't forget about MT5, has a way better risk to reward than binary options because you can do a 1-to-1, 1-to-2, 1-to-3, 1-to-4. But that's only if you are taking trades for that long. You have to take the trades for that long, though. That's the thing. So, it's like a pro and a con. Whereas with risk to reward on binaries, it is lower risk to reward. So I'll put lower. Lower risk to reward, but higher chance of clearing. So far, does that make sense to everybody here? Are you guys following me? Let me know in the chat. Give me some 7s if you guys follow. Now, and then we went over market movement, how you're trading. So let's put how. All right. how markets are traded. So we talked about how each market is traded, okay? And you look at an MT4 5 capped based off of total pips in move. So MT4, MT5, you were capped based off of the total amount of pips that you can catch in that move. Okay? Boom. I gotta put this as well. Not only that, all right. So you need larger moves to make more money, unless you have a lot of money in your account. You need larger moves to make more money, and you're also capped based off of how big that move actually is. Okay? Whereas with binaries, all right, with binary options, okay, you're only looking to be correct, all right? I'll put this. I'm not even showing my screen, guys. You guys could have told me that, right? You guys are just listening here. You're watching me. You're listening. You're not even telling me. All right. So, boom. Make sure I got this on the screen so everyone can see now, right? So, this is what I was typing that whole time while you guys were just watching me. All right. Boom. Okay. So, 1 point correct, looking for smaller moves. All right. 1 point to be correct, looking for smaller moves. And more trade opportunity. Oops, that was opportunity. Oh, opportunity. All right, you guys following so far? Let me see real quick. All right. We got a little over 30 people watching right now, and we got 19 likes. Let's get some more likes on this video. Do me that one solid. You know what I'm saying? I provide all this free info for you guys, and all I ask for in return is a like on the video. All right? I'm not asking for a $5,000 course, right? You know what I'm saying? Just a like on the video. That's all we asking for. All right? Let me know I'm doing good here. All right? So, boom. So, we want simplicity, risk to reward, how the markets are traded. All right? Boom. Let's go into something else. Time spent on the charts. Now, this is a touchy one. This can be very subjective, because I know there are some MT4, MT5 traders who don't spend lots of time on the charts. All right, who don't spend a lot of time on the charts. But we can't group a whole group of people based on a select few, right? You can't put something on a whole group of people based on a select few. Okay, so if one basketball team, there could be one amazing player on the team, but if the team sucks, the team sucks. Right? No matter how you put it. Okay? So time spent on the charts, majority of MT4 and MT5 traders spend a lot of time on the charts. A lot. And even when they're not on the charts doing analysis, I can tell you for a fact I know what you're doing. You're checking your MT4 and MT5 every hour, every 2 hours. Some of y'all be on the toilet. Some of y'all be in the shower. Some of y'all be on dates. And you pull out your phone to check your MT4 to see if your screen is blue or to see if your screen is red. My point is that it takes so much more maintenance, okay, to trade leverage. All right, there's so much more maintenance to trade leverage. Now, this whole thing that I'm talking about right here is not based off of, I want to make this very clear, because I know certain people get on and they're, oh, it's not you. Trust me, I know. I have people literally in my group chats that make thousands of dollars a day. All right, obnoxious amount of money trading MT4 or MT5, whatever it is that they trade, right? But the thing is that they also have thousands of dollars in their account. So if you're not starting with that kind of money, 10,000, 20,000, or even 5,000, if you're not starting with that kind of money, I'm not talking to you. I'm talking about the average person. My channel is primarily based towards beginners. So like, beginner Forex traders, beginner binary options traders, just people looking to get into trading in general, right? So I'm talking to the average person right now, right? Just coming in. Most of the time, people are getting in. They spend a lot of time on the charts because, again, look at what we set up a little bit above. You're looking for larger moves in the market. So to have larger moves in the market, what you need to be doing is you're trading or you're marking up higher time frames. Okay? Higher time frames. Now, we all know, or we should know. If you didn't know, I'm about to educate you, right? We all know that when you're trading higher time frames, the higher you go up in the time frame, the more accurate your setup or your analysis is going to be. That's just absolute truth, right? If you're trading, someone's trading on the 4 hour is going to have a more accurate setup trading the same strategy as someone that's trading on the 5 minute. So the higher time frame you go up, the more accurate you're essentially going to be, right? But when you're trading the higher time frames, what that also means is, especially if your strategy is contingent on you waiting for the market to do something. So let's say I want to wait for it to hit a certain price. Let's say I want to wait for it to close out above, resistance. I want to close out, breaking above, resistance, or I want to close out, at the break of structure, at the bounce, right? Maybe we retested, and I want to wait for it to close after the retest. If you're trading on the higher time frames, then you have to wait for that full candle, whether it's a 1 hour, whether it's a 30 minute, whether it's whatever. You're trading on those time frames. You have to be on the charts longer. And even if you're not sitting down on the charts, maybe you're managing it from your phone, because I know a lot of people do. My point is it takes more maintenance and more time and effort putting into even just finding the trade, right? Even just finding the trade to then have to hold that trade, all right? Do your risk to reward, right? And get the big moves in the markets and calculate how many pips you can catch before it reverses. So it's way more maintenance. Time spent on the chart, way more maintenance. I don't know how to spell. It's all good. All right? More maintenance to be able to trade that than to trade binaries. Why? Because with binaries, a lot of the times, you're looking at the 5 minute, maybe the 15 minute, but I really don't look at the 15 minute too often, right? All right, so most of the time you're looking at the 5 minute, and that 5 minute candle closes every 5 minutes. So I'm literally, by the time I see the setup, there's probably like 2-3 more minutes left in the candle. All I gotta do is wait 3 minutes, see if the candle closes where I want it to go, and then what happens is it's very simple. All right, what happens is it's very simple. I just go ahead and I either clear the trade or I lose the trade. That's it. Simple. Right? So, trading on higher time frames. All right. And I'm just giving you guys my experience and my opinion. I wouldn't necessarily say this is biased because I trade both. So I don't really think it's biased. I think they both have their pros and cons. Like I mentioned in the beginning, right? It's really depending on your life and what it is that you're doing. There are plenty of times where I don't have the time to sit down and really focus on the charts. Actually, let me put this in there. Boom. And then all right. Boom. But yeah, so there's not a lot of times, not a lot of time that you need to invest into the charts when it comes to binaries. I'll put smaller TF, that's smaller time frames. Smaller time frames. All right, smaller time frames, easier setups. All right, or simpler setups, however you want to call it. All right. So, I mean, I could go on for days, talking about each one of them and, how it works and all this and all that. But I think this kind of like, if you're just looking at comparing the two, and again, this is very unbiased, right? We can go through all of it again, right? But if you're kind of just looking at the two and you're looking at the difference between the two, these are the differences. Both of them have pros and cons. Both of them can be good styles of trading. But it's all depending on what it is that you are looking to do, right? Simplicity, when we're talking about simplicity of it, I mean, you don't really have to know a lot. MT4, we didn't go over this, but like with MT4 and MT5, you got to learn how to use the apps. You got to learn about things like leverage. You got to learn about swap. You got to learn about spread, all the different terminologies, stuff like that. What we did talk about is the good pros. The pros to MT4 is that you can just set it and forget it. You don't have to be too accurate because you can set the trade, put some parameters on it, and as long as it doesn't hit your stop loss, you're good to go. So that's the pros, right? The cons, like I said, is you got to learn all the extra stuff, and yeah, you got to learn all the extra stuff. Swap, how to use the apps, and all that. And most of you here are stuck just on that. That's why the number one and number two most viewed videos on my channel are how to use MT4. Both the number one and the number two most viewed videos on my channel are both how to use MT4. Because even learning the app by itself is kind of complicated. So the simplicity right off the bat is not there. Okay? Now with binaries, the pros is, all right, I mean, all around binaries is simple. I mean, you first get on the platform, you don't have to link a broker to the trading platform. A lot of the times the platform that you trade on is going to be the same broker where you put your money at. So simplicity right off the bat. When you look at a binary broker, it usually tells you your currency pairs, the payout percentage, you buy, you sell, and how long you're going to be in. Simplicity right off the bat. You don't have to learn stop loss, take profit, pips, and all that stuff. Just right there. Everything is so simple. I don't want to go too much in depth with that. I think we get it by now. Very simple on binaries. So binaries, in my opinion, wins that one, right? Binary's going to win all of them, right? But I'm going through all of them so that you guys can see each, right? So risk to reward. I already said MT4 and MT5 have a way better risk to reward. Way better because you can set a parameter to risk $100 to make $500, right? You can risk $100 to make $500, but that is contingent on you being able to clear, right, and make that amount of pips. So to do a one-to-one, let's just say, I risk 100 pips to make 500 pips. Easiest scenario. Or I risk 10 pips to make 50 pips, right? That's a good risk to reward, but it's still contingent on me making those 50 pips, okay? Binaries, on the other hand, has a lower risk to reward, okay? There is no real risk to reward because you're paid a percentage always. You're always going to be paid a percentage of what your total risk is. So if your risk is going to be 100%, if your risk is $100, okay, your reward paying out at 70% is only going to be $70. I always tell people when you trade binaries, never go below 70%, right? Just my tip to you. But it's cool because even though your risk to reward isn't the greatest, you have a much higher chance of winning and clearing that trade. Everyone starts off at 50-50. You get a little bit better. You increase those odds, right? When you're looking at how the market is traded and how the markets move, I think all around, MT4 and MT5 loses on this one. The first two you can kind of compete with. MT4 and MT5 loses on this one completely because you have to look for larger moves unless you have a large amount of money in your account. I don't care what any guru says. You got to look for larger moves unless you have a large amount of money in your account. And not only that, but the moves or the money that you can make is capped based off of how many pips you can catch in that move. So your money is based off of the pips that you can catch, but then it's capped at how many pips that the markets actually move. And we know the markets are always at some point going to reverse. There's multiple reverses in the market. All right? So the thing is you don't want to get stopped out. So again, just more things that you got to be aware of. Takes away from the simplicity, right? So you need these larger moves, all right? And it's contingent on you catching the big move in order to make X amount of money, okay? So boom. All right, that's risk to reward. I mean, how the markets are traded, sorry. Binaries, you only got to be 1 point correct. That's it. So a very small move in the market, as long as you're right in the direction that the market is going, you can win your total payout. All right. And with that being said, because we're not looking to catch big moves, all you need to do is be 1 point in profit, and 1 point equals 10 points equals 1 pip. Sorry, 10 points equals 1 pip. That means you only have to be a fraction of a pip correct, and you can still win. So you're looking for much smaller moves, and smaller moves will essentially lead to you having to do less of an analysis. You don't have to do a very big analysis if you're only looking to catch a very small move in the market, right? So that also brings more trading opportunity, because if you're looking for smaller moves and you're not doing too much of an analysis, then as you're getting into these trades for about 5 minutes, 10 minutes, 15 minutes, you're done with that. You can move on to the next trade and do the same thing again. And again, the market's reversed multiple times throughout the day. So as you're catching these reversals, you have way more trading opportunity. Okay? Then you're looking at time spent on the charts. All right? Time spent on the charts, very clear, straight to the point. Time spent on the charts, MT4 and MT5, for the most part, you're trading the higher time frames. All right? Again, unless you're scalping with a lot of money in your account, you're trading on the higher time frames, you're looking for larger moves. So as you're trading on the higher time frames, a lot of times it's going to require you to be more attentive, and it's going to require more maintenance of actual chart work. So you're doing bigger, more of analysis, your market structure, you're barking up your lines, your triangles, you're looking for, head and shoulders, breaks and retests, a lot of the different things, those big strategies that everyone uses, right? Which are good. They're all good. Not saying they're not. What I'm saying is it takes a little bit more. And with that, if you're trading on the higher time frame, most people who trade, especially, people who really trade, right? We typically wait for a specific move. We wait for a candle to close to confirm that move, especially if you trade candlestick reversals. So you wait for the candle to close. If you're trading the higher time frames, a lot of the times, even if you scale in, so if I'm trading on the 4 hour and I scale in, I'm probably scaling into a 30-minute time frame, right? Or a 15-minute. Either way, you got to wait for that candle to close. If you're trading on the daily, you're probably scaling into the 1 hour to see when the 1 hour is going to close. Either way, that's a big candle that has to close. So you're spending more time on the charts, whereas with binaries, smaller time frames, easier setups, trading on the 5-minute candle closes, just like that, we go ahead and we get into that trade. So I'm going to leave this here for you guys. You guys can decide for yourself which one you think is better, which one you would rather trade. It's completely up to you. For me, if we're looking at just these 4 things that we went over today, and again, there's so much more that we can talk about, all right? But I don't want this video to be 2 hours long, right? There's so much more that we can talk about, but just these 4 things alone, I think binary options wins the majority of these things. Simplicity, how to trade it, and the time spent on the charts. 3 out of 4, binaries is up. Risk to reward, MT4, MT5 smacks it. All right, absolutely smacks it. So hopefully that answered a lot of your guys' question as to why I trade binaries and not MT4 and MT5, and also what the difference between the two is. And we can get into like brokers and stuff like that as well. I don't think that's necessary. I know a lot of people like to talk about how binary options brokers are sketchy. Well, newsflash, reality check. In every industry, brokers are sketchy. MT4 brokers are sketchy too, right? So, hey, you live and you learn. You got to do your research and figure out where it is that you're putting your money before you go ahead and do it. All right? But how you guys feeling after that? Let me know in the chat real quick. Am I talking to myself here, or are you guys here with me? How you guys feeling? How are you guys feeling after that? Little educational session. Yes, Jeffrey, I'm still on pocket option. I am still on pocket option. All right. How you guys feeling? Let's get it. Let's get it. And do you guys have any questions too? Because I know you guys be flooding my inbox with questions all the time. And then when I do these lives, nobody want to ask questions. It's like you get shy all of a sudden, right? So even on the Telegram, which by the way, guys, if you're not in my Telegram channel, Make sure you join. Make sure it's the right one. I do not promote signals. I don't promote all that extra stuff. I'm never gonna ask you to send me Bitcoin or invest with me or whatever the case may be. So don't get scammed on Telegram. That's the reason why I moved away from Telegram in the first place. But I like Telegram. I like communicating with you guys on Telegram. So we got back on Telegram. All right. I don't trade, Lady Sunshine. I don't trade the 1 minute, but I do look at the 1 minute. Hopefully that makes sense. So when I trade, most of the time, I'll just pull up the charts again for you guys. So when I trade like this. Oops. I always trade with 2 time frames on. So I always trade with the 3 minute and the 5 minute. And then what I do is remember, the higher the time frame, the better, the analysis, right? So I try to get my analysis and stuff. Overall, I always have the 5 minute open. And then I'll have the 3 minute here. And as I'm looking for entries, I'm looking for entries on the 3 minute. But I also go back and forth to the 1 minute as well. So the 3 minute and 1 minute, I'll cycle back and forth just to see if they correlate and what it is that they're doing. All right, so if the 3 minute and the 1 minute both tell me to sell, right? Like right here, for example, on this setup, right? I don't know if you guys can see it. Let me take off my webcam real quick. Boom. So on this example right here, so if you're looking at the 3 minute here, little lesson for you guys, right? I guess bonus, right? So as you can see here, based off of my confirmations, this 1 minute is about to come down. All right, so this is about to come down. If you guys know my strategy, that's typically what I'll be looking for. Now, I like seeing it at the top Bollinger Band, right, which you might come to. But in terms of the stochastic, it's about to come down, right? It hasn't done it yet. So what I would do is I still go to my 3 minute. I look at my 3 minute. If we're looking at the stochastic and the DMI, it looks like they're about to cross down as well. Do you guys see that? So it looks like the stochastic and the DMI are about to cross down. Boom, boom, boom. Then I come to the 1 minute. I want to see the same thing. Now, one thing that I notice is that this isn't oversold yet, right? So as this is coming down, and look, right, it's not ready to come down yet. So I would look at both of them, and I want to see them line up to tell me when it's ready. So this should come up here first, okay? Oops, what did I just do? Oh, so that should come up here first, and I want to see this come down on the 1 minute. I want to see this cross. And around the time that already happened, it's going to happen over here too. So I cycle back and forth between the two. Ideally, I'm looking at the 3 minute, but I also look at the 1 minute just to see if it's doing the same. Because sometimes, remember, I'm only in the trade for like 3 to 5 minutes. So if the 1 minute is telling me that it's about to shoot up, and this is telling me that it's about to come down, I don't take that trade. I want to see them both tell me the same thing. But that's the only time I look at the 1 minute. Hopefully that makes sense. All right. Let me know if I answered that question. All right. Here we go. Look at all the questions coming in now. There you go. Look, it only takes one person to ask a question and then everyone else wakes up. All right. How often do you do out of money trades in Nadex? I don't trade Nadex anymore. It's not my primary. But when it came to Nadex, I didn't really. I liked more scalping in the money. I liked scalping in the money or at the money. In the money, at the money. Out of the money requires a longer time for a longer analysis. So if you are trading on the higher time frames, out of the money could be for you. Look, look, look. Right? So, boom, exactly what I said, right? 1 minute cross, this starts going down. We got the drop on the 1 minute. And then look, 3 minute cross. Now the 3 minutes going down too. You guys see that? Now I don't think this is going to continue to go down. but I just want to show you that quick example. It might come down to the 200 moving average, but I'm also looking at, oops, I'm changing the wrong one. But I'm also looking at the 5 minute here, the 1 minute here. Oh yeah, it's gonna come down. I was gonna say it could bounce off the 200 and then go up, but it already broke the 200. So broke the 200, it's gonna drop. But you guys see, and this is live, right? I literally showed you this before it even happened. I said it was gonna come down. We was waiting for the confirmation. 1 minute, 1 minute, 3 minute, 3 minute, and now we're getting all of our confirmations for it to come down. And that's what it's doing. And it's probably gonna come down to here. All right. Look how simple that was. I'm not even trading right now. I just showed you guys just a quick example of what it is that I would look at. And as I'm showing you, it happens right in front of us. I didn't have to draw up a support. I didn't have to draw up a resistance. I didn't have to look at higher highs, higher lows. I didn't do anything. Right? Just to understand the markets and how it is that I trade. What it is that I look for. Super simple. Binary options. One candlestick, I'm right. That's all I need. All right. Boom. All right. What academy are you teaching on now? By the way, that candlestick just closed and it is still dropping. I would have cleared that trade. Very simple. So I trade with Akashics, the Akashics Academy. So yeah, it's a part of MDC. It's a part of my daily choice. I don't know if you guys know my daily choice. But MDC, a lot of people were asking me about that as well. So MDC is not a trading platform. MDC does all types of things. They do trading. They do like fitness products. They do CBD. They do travel. It's a travel club as well. I'm involved with all of it, to be honest with you. But I trade on Akashics. Akashics is the trading side of their company. All right, so that's what I'm doing. All right. Yeah, the 3 candlestick rule. So somebody said, can you explain the 3 candlestick rule? So the 3 candlestick rule is just pretty much whatever time frame you trade on, taking the trade for at least 3 candlesticks. So if I trade on the 5 minute time frame, I'm going to be in that trade for at least just about 3 candles, so about 15 minutes. Some people, when they trade, they only take it for one candle or 2 candles. So when you do a 3 candlestick rule, it's just giving the market more time to move. All right, you're giving the market a little extra time to move. All right. By the way, that setup I just showed you is still dropping. Like I said, it's coming down to, more than likely going to come down to the 200 moving average and bounce up. I'm going to pull that up again for you guys. So boom. So in a situation like this, how do I know to get out? Or how do I know where it's going to come down to? So I said it's going to come down to around about right here in the 200. If you look at the 1 minute, now the 1 minute is getting close to shooting up. It's getting close to reversing and coming up. So we're about to get that cross up on the 1 minute. So that's why I cycle back between the two. And it doesn't have to be a big move up. Like, it doesn't have to go all the way back up. But I just know it's typically probably going to bounce right here. And actually, the 5 minute is close to it too. So it might even come down to the 5 minute one, which is right here. 5 minute is right here. So it could bounce here, it could bounce here. It's going to bounce somewhere in that area. And the 1 minute is showing us that. Right? So that's enough sauce for tonight. Hopefully you got the juice. Who got the juice? We got the juice. All right. So we're going to go ahead and wrap it up for tonight, guys. Hopefully you guys enjoyed this little educational session. It was somewhat of a training, somewhat of an educational session, somewhat of just getting into the mind of Rockstar. Right? But if you guys enjoyed the video, man, thumbs up. Thumbs up the video. We're super close to hitting 100,000 subscribers. So if you guys can help your boy out and just smack it, I would love that. I would highly appreciate that. It's like one of my goals right now is to hit 100,000 subscribers. And I want to do it as fast as we can possibly do it as a group. So Rockstar family, I need y'all to help me out with this, man. Like the video. Go watch some of the other ones. Share them out. You know what I'm saying? Post it on your Instagram. Tag me, right? Tag me on Instagram, right? Share the love. Share the love. If you know anyone looking to get into trading, we make trading super simple here on this channel. Whether you're 5 years old or whether you're 62 years old, we can make you some money in the markets as long as you're willing to be coachable and learn what it is that we're talking about. But as always, this is your boy Rico, a.k.a. Rockstar FX. Have a blessed night. I'm out. Peace.